I'm Jennifer Cordingley, and this is another Targets in Focus interview with Alessio Rastani from Leading Trader to discuss movements in dollar pairs and his predictions for each of these pairs. Alessio, thank you for joining me. Firstly, let's look at the euro. The ECB seems to be in this wait-and-see period. How is this affecting the common currency, and do analysts see risks in further euro gains?
There have been fresh reports that the European Central Bank, the ECB, is shrinking its balance sheet and beginning to tighten its policy of monetary easing. Banks are beginning to pay off their loans to the ECB early, in fact. Some people are seeing this as a sign of greater financial stability for the Eurozone, but there are still many risks there. For one thing, if this causes a rise in the euro, which in fact, as we've seen already, it is, then this will put pressure on exports. As we know, Germany benefits from a weaker euro. Germany would like to have a weaker euro because it makes the exports it makes competitive. So a higher euro will not be welcome at a time when the Eurozone is still struggling in its recession. Secondly, and I think this is probably more important, we shouldn't kid ourselves that the ECB's shrinking balance sheet and banks paying off their loans back early is a sign of financial stability. I think we're just kidding ourselves if we think that. Nothing of the sort. As the economist Richard Koo of Nomura has argued, the biggest problem in Europe right now is not the lack of supply of money, but the lack of demand for credit. The big surprise of this economic crisis is that the money stopped flowing through the economy. They're throwing more money into the banking system, as we've seen the ECB has been doing so, but it's stuck there. This is what we call a liquidity trap. The money is not washing around the economy and is not doing any good. So what does the ECB do? They put more money into the economy. The expansion of the money supply is enormous, but it's not really being demanded. That's the problem. And my view is until people want to borrow money in Europe, until money is being demanded, Europe's problems will not be solved.
Alessio, what are your short, mid and long-term predictions for the euro-dollar?
Yeah, interestingly, the funny thing is that, Jennifer, just before when I was preparing my report to you this morning, I was going to say that my prediction was that 1.35 level, the key psychological support level, would break. But it seems that the euro has stole my thunder a bit early this morning, because this morning about 7-ish, the euro-dollar actually broke that key psychological resistance level at 1.35. And we're just slightly above that level right now. Now, interestingly, everyone is talking about the fact the euro is rising against the dollar, but little is mentioned about the impact of the yen and the dollar index on the euro. We'll cover that in a minute, but let's cover the euro dollar first. Short term, we have strong resistance, as I mentioned. Actually, we broke that resistance at 1.35. This level is also where the 200 moving average is, by the way, on the weekly charts, which is a key technical level observed by many funds. The question is whether the euro-dollar, since we've broken the 1.35 level, can we maintain this level? Can we now hold ourselves above this level? And that's going to be key looking through this week.
Let's move on to the UK. Ever since the UK Prime Minister announced the EU referendum, the pound has been on a slippery slope down. Can anything stop the pound's journey south in the short term? And do you see this weakness around the euro for a long time?
Yeah. Well, let's cover the Cameron statement on the UK referendum, first of all. I wouldn't put much into that. I don't think the GBP's fall recently has been due to that so much, because one has to remember that David Cameron's comments when he said that, we should take it with a pinch of salt, because when he said that he's going to give, if he gets reelected in 2015, he will offer the British people a referendum by 2017 on whether the UK will stay in the European Union. Now, the fact is, that's what he actually said. He never committed himself to a no vote on the referendum, which is interesting. He never said he's going to vote no on that referendum. Secondly, I think he's only doing this for political reasons, to political gesturing to Brussels and the Eurosceptic base here in the UK. And finally, he himself admitted that he prefers Britain to stay in the European Union. So I don't think that is much of the cause for why the pound has been going down here. The pound's journey south, as you put it there, Jennifer, is due to the fact that the UK's problems are probably worse than the European Union. I don't know if you remember, Jennifer, but the last time we spoke back in October, if you recall, and I said at the time that UK's positive GDP figures at the time in October would not last, that it was just a one-off, perhaps due to the Olympic boost, that we needed to see consistency. And as we rightly predicted back then, we have not seen consistency. The economy shrank again in late 2012 by 0.3%. So not many people know this, but the UK is only halfway only halfway through the great deleveraging that began in late 2008. There is still a further 45 years of this deleveraging left, where companies, basically what they're trying to do is minimize their debts instead of borrowing. The UK economy has shrank because of the austerity measures, which, as they have admitted themselves, the government here in the UK admitted they'd probably cut too deep, and at a time when people have stopped spending and borrowing. Plus, you got the fact that the UK's lending policy is still very tight compared to that of Europe and the US. So yes, in answer to your question, I do see further decline in the pound in the months, perhaps over the many months to come, until we see further evidence of growth in the UK.
Lastly, Alessio, has the yen reacted to Tuesday's decision by the Bank of Japan to follow the government's request to increase the inflation target to 2%?
Yes, it would appear it has done, and the Japanese government seems pretty adamant on continuing its monetary easing policy to beat deflation. That's what they've said. We've seen the yen continue its downward free fall, which started late last year. The question is now, when is this decline in the yen going to stabilize? It is certainly due for a reversion to the mean, or a snapback rally, whatever you want to call that. But that may still take time to happen. We're still not seeing bottom in the yen's free fall. Okay, so going to the dollar-yen, Jennifer, once the yen's fall has stabilized, we probably will put a medium-term top at the 92.8 level. That 92.8 level is where we have some pretty strong resistance on the dollar-yen in the form of its monthly pivot points. Long-term, though, going towards the long-term, I wouldn't be surprised to see the dollar-yen heading to 95 and maybe even 100 by the end of the year.
Thank you, Alessio, for your advice to our viewers today. There will be another Targets in Focus interview on Friday with Navjeet Grewal. Take care.